There is a story we have all been told since we were kids. It comes from our parents and our grandparents. It is pushed by every smiling face on a bus bench advertisement. It says that renting is throwing your money away. It says you are just paying your landlord's mortgage. It says buying a house is the smartest investment you will ever make. We believe this story so deeply that it feels like truth. We feel ashamed if we are still renting at age 30. We feel like we have failed at being an adult. So we panic and we buy houses we can barely afford. We stretch our budgets to the absolute breaking point. We convince ourselves we are making a wise financial move. But what if that story is wrong? What if for millions of people today, buying is the mistake? The math of the world has changed. The market is completely different now. And blind faith in homeownership is trapping people. It locks them into a life with no cash and no freedom. Here is the hard truth for many of you. Your house is not an asset. It is a liability. It is a huge expensive purchase disguised as an investment. My name is Cool Joe. I spend all my time doing the math the real estate industry hates. If you feel pressured to buy a house right now, or if you own a home and still feel broke, you should subscribe and stick around. Today we are taking apart the rent versus buy myth. We will show the hidden costs of owning a home, costs that are just like throwing money away. We will look at the price to rent ratio. That is the most important number you need. And I will show you how a smart renter who invests can often end up richer and more free than a homeowner. To see the truth, we must redefine throwing money away. When you rent, you pay a monthly fee for a place to live. That money is gone and you know it. But when you buy a house, they tell you your payment is building wealth. That is not really true, especially at the start. A huge part of your monthly cost as a homeowner is also gone forever. That money builds you zero equity. We call these the unrecoverable costs, and they are silent wealth killers. Let us break them down one by one. First, there's mortgage interest. In the first years of a 30-year loan, almost 80% of your payment is just interest. You are not paying yourself back. You are renting money from the bank. Look at an amortization schedule. It is shocking. You might pay $3,000 a month, and only $400 actually lowers your debt. The rest vanishes into thin air. Second, there are property taxes. This is a permanent rent you pay to the government. In some states, this cost alone is as much as a cheap apartment. Third, there is maintenance. You should budget 1 to 2% of your home's value every single year. This is not for fancy renovations. This is for broken water heaters and leaking roofs. Fourth, there is homeowner's insurance. And fifth, there are the huge fees to buy and sell. Just to close the deal, you can lose 10% of the value. Add all of these up, interest, taxes, maintenance, insurance, and fees, and you will see the unrecoverable cost of owning is often higher than renting. You are not building wealth. You are just paying different landlords, the bank, the state, and the repairman. The whole decision usually comes down to one number, the price to rent ratio. Think of it like a PE ratio for a house. You take the price of a home and divide by the yearly rent for a similar place. If a house costs $500,000 and it rents for $2,000 a month, or $24,000 a year, the ratio is about 20. History says a ratio below 15 means buying might be better. A ratio above 20 means renting is probably smarter. In many big cities today, that ratio is 25 or 30, or even higher. When the number is that big, the math is screaming at you to rent. Why? Because the cost to borrow that huge purchase price is way more than rent. By renting, you are essentially shorting the housing market. You get to live in a $1 million asset for a fraction of the cost. You let the landlord carry all the risk of the furnace breaking or the market crashing. You get housing at a discount while they bet on prices going up. But the biggest trap of home ownership is the down payment. This is the invisible wealth killer no one talks about. To buy that $500,000 house, you need $100,000 down. That is $100,000 in cash, now locked inside your walls. It is dead money. It produces nothing. You cannot use it for groceries or for opportunity. It is completely trapped. If you took that $100,000 and invested it in the S&P 500, which historically returns 10% a year, it would double about every 7 years. By locking it in a house, you are making a giant bet. You are betting your one local house will beat the entire global stock market. That is a bet real estate usually loses. A Nobel Prize-winning economist proved this. Over the last century, real home prices barely beat inflation. The giant gains people talk about are often just inflation or luck. By renting and investing that down payment, plus the monthly difference you save, you keep your liquidity and your diversity. You get a higher expected rate of return. This is the rent and invest the difference strategy. For disciplined people, it is a wealth-building rocket ship. It turns you from house rich and cash poor into a liquid millionaire. We also must talk about liquidity and mobility. These are super valuable in today's world. Your house is an anchor. In a fast-changing economy, the ability to move is a huge asset. If you get a job offer in another city for $50,000 more, a renter can pack up and leave in 30 days. A homeowner is trapped. They have to sell the house, pay 6% in agent fees, pay closing costs, and possibly sell for a loss. The cost of selling can wipe out years of equity in one day. By buying, you are betting against your own mobility. You are betting your location is perfect for the next 10 years. If you are wrong, the penalty is brutal. Renting buys you options, and in a volatile world, options are extremely valuable. Now I hear the big objection already. Everyone yells this in the comments. But cool Joe, rent goes up every year, my mortgage is fixed. This is true, and it is the best argument for buying. A fixed-rate mortgage is a hedge against inflation. But remember, only the mortgage is fixed. Everything else keeps going up. Property taxes rise every year as towns need more money. Insurance premiums are exploding because of climate change. The cost to fix a roof goes up with inflation. You are not immune to inflation, you just feel it differently. And while rent does go up, so does the stock market. If your investment portfolio grows at 7 to 10% a year, it will likely outpace the 3% yearly rent increase. You are using your growing assets to pay for your life, instead of using your life, your house, as your only asset. The gap between your investment growth and rent hikes is where the renter wins. There is also a lifestyle piece here that spreadsheets miss. Homeownership is a part-time job. It is weekends spent at the hardware store instead of with family. It is the stress of a strange noise in the basement, and knowing the bill is all yours. It is the mental load of managing a thing that is always slowly breaking. When you rent, you outsource that stress. You are buying back your time. If the dishwasher breaks, you make one call and it is fixed. That time freedom has real value. If you use your free Saturdays to learn a skill or start a business, you might actually make more money because you're not distracted by house projects. You trade the pride of ownership for the luxury of freedom. Many people buy for stability but end up with anxiety. I'm not saying you should never buy a house. Buying makes sense in specific situations. If you are settling down for 10 plus years, if you really want to customize your space more than you want cash, and if the price to rent ratio in your area actually makes sense. But do not buy because you think it's a required step to wealth. Do not buy because you fear throwing money away on rent while you ignore the money you throw away on interest and taxes. A house is a consumption choice like a nice car. It is a place to live, not a guaranteed retirement plan. If your primary home is your primary investment, you have a dangerous and concentrated portfolio. It is illiquid and expensive, and one bad storm or one bad neighborhood can ruin it. The real path to wealth is not about owning a deed. It is about owning assets that pay you. Stocks, bonds, businesses, these pay you money. A house is an asset that you pay money to. Do not let the old story bully you into a bad decision. Run the numbers, check the ratio, see the ... hidden costs. And if the math says rent, then rent with your head held high. Invest the difference, build your liquid empire, and let the landlord worry about the roof. If this made you rethink the classic dream, hit that like button. Follow Cool Joe for more ways to ignore the pressure and build real wealth. I will see you in the next video.